Hey traders, in today's video, we're going to be looking at two potential trading opportunities, talk a little bit about how the trading month of September was, and also touch on the subject of proper goal setting. Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradeEmpower.com. And thank you once again for joining us for another Forex Market Preview. I want to start things off by giving a big thank you to all of our syndicate members that joined Jason Greystone and myself in the live room last week. We had a heck of a time there, really enjoyed ourselves. And just from the comments and the feedback that you guys gave, it seems like you got a massive amount of value by being able to watch and really trade the markets with us 3 hours a day, and for some of you, even 6 hours a day. So it's great to hear that was a positive experience. For you guys that didn't get a chance to do that, you can always sign up for a free 1-week trial in either of our live rooms. Just head over to TradeEmpower.com, click on products and services, and you'll see the information right there. Now, as mentioned earlier in today's video, we're going to look at the charts and check out two potential trading opportunities that are on my radar. We're also going to talk a little bit about how the month of September was with our trading, but I want to start off talking a little bit about goal setting. This was a topic that came up in the live room on Friday, and it was a trader that said, "Hey Akil, I'm a little new. I just had a question about goal setting and how many pips we should shoot for per day, per week." And believe it or not, that's a very common question that I get. And my answer is always the same. I don't believe in setting outcome goals, especially with trading. So that means I don't believe in setting goals, setting quotas, say like I need to have 50 pips a day or I need to have 100 pips a week. Really, because a lot of trouble can come from that. The thing about the markets is we don't control the markets. The markets will do whatever they want, whenever they want to do it. They move the way they want. They provide opportunity only when they want to provide opportunity, meaning that we have no control or very little control aside from trading our plan of what we can expect and what we can gain from the markets. So our job as traders isn't to shoot for a specific outcome. It's really to consistently follow our plan and trust that if we do so, we're going to get the outcome that we expect. And here's a little bit of the issues that can come with setting specific outcome-based goals. Let's say a trader sets a goal for 50 pips a week, or let's say 100 pips a week, and they're trading well. By the time they get to Friday, they're at 80 pips. Now, let's say Friday is another dead day in the markets. They're not really moving much. The London traders already went home and are headed to the pub to start enjoying their weekend. The traders in New York are on the lunch hangover where they know there's really no point in trading the market after 11 o'clock New York time. Now, that trader that has 80 pips, guess what? They need to find 20 pips somewhere in the markets or they don't reach their goal. So what do you think typically happens in that scenario? Yeah, they start looking at different pairs outside of their portfolio. Maybe they start forcing trades, looking for trading opportunities that aren't really there, but because they need to hit that certain mark, they start looking for more. And typically when you do that, you run into trouble. You start making trading mistakes and you end up digging yourself deeper into a hole. On the other hand, let's say a trader has a 100 pip a week goal and they trade exceptionally until Tuesday. Tuesday, they've already achieved their 100 pips, right? Do they shut it down for the week, right? Do you just not trade Wednesday, Thursday, Friday because you've already achieved your goal, right? Some may say, yes, Akil, I've already made what I wanted to make, but, or so I'm done. But what if this is one of those monster weeks? For example, I think last week in our syndicate, we made 300 pips. What if we would have stopped as soon as we hit 100? Well, now we just missed out on 200 more pips. And some of you may be saying, well, Akil, money is money, but here's how it works in the trading game. Trading is a long-term game, right? So the 200 extra pips that we made that week, That can make up for losses that come next week. That can be the big boost in our equity curve that digs us out of a drawdown. You don't want to shortchange yourself and miss opportunities, because once again, you're killing your consistency in the market. So, this is a brief way of having this discussion. Obviously, I want to keep this video 15 to 20 minutes, but those are some of the issues that can come with setting strict outcome goals. So in my opinion, it's better to have process goals. It's okay to have guidelines. I always say that, in the professional trading world, if you can average between 2 and 5% a month on average, doesn't mean month by month by month, but when you break down your year end as a total, if you're in between that 2% or 5% per month average, you're considered a good trader. So that's a good way to set guidelines. But as far as specific goals, certainly think that's a trading no-no. So with that being said, we got that out the way. Let's head over to the charts. I want to show you 2 trading opportunities that are on my radar. Then we'll return and I'll do a brief recap on how our trading month went for the month of September. All right, so the first pair I want to take a look at this week is going to be the dollar Canada. And right now I'm on the 4-hour chart. Now, for you guys that follow me and watch this video each and every week, you'll know that this is a follow-up on last week's trading idea. Last week we were looking at dollar Canada giving us a move back up into potential resistance. We came into that level of resistance, we've reacted, and now we're putting in another opportunity or another potential opportunity to get short. And this time it's going to be in the form of an advanced pattern formation. So when I'm looking at these advanced pattern formations, I always want to start off by identifying my impulse or anchor leg, and that's going to be our X to A move. So in this case, we're looking for a swing high to swing low. So my X to A is going to be my swing high right up here to my swing low there. You can then see the market retraces. This is going to be my B leg. So we can put a B here. We then get one more retracement right here. This is going to be my C leg. And in order to have this Gartley formation complete, I need the market to move right up to our 127 extension. So taking my Fibonacci extension tool, I'll show you guys the long version of doing it. Go to my little pencil deal here. Go down to Fibonacci extensions. Shortcut is F9. And draw out that Fibonacci extension, swing low to swing high, that A to B, and back down. And I'm looking for that 127 extension as my entry point for this advanced Gartley formation. Now, what I want to do here is I want to put an aggressive limit order right on that D completion. Now, in many of the techniques and strategies that we teach or that we work with in teaching traders, we offer different types of entries, everything from super aggressive to super conservative, and depends on the strategy, depends on the trader's personality as well. With advanced Gartley formations, we always advise, or advanced pattern formations in general, we always advise a very aggressive entry, meaning identify the completion point, put a limit order, in this case a sell limit order, right at that completion point, and get involved as soon as it is a valid pattern formation. We don't want to wait around because typically the market won't give you that opportunity. So for those looking for a chance to get short here on dollar Canada at that same level of resistance, you now have an advanced Gartley formation, looking for a decompletion and looking for a move back down into your 382 and 618 Fibonacci levels, if you take those as traditional targets. Next, let's go over to the pound dollar. That's going to be very similar. And before I show you, all right, so now we're taking a look at the pound dollar, and I had to do a little video editing here because I want to surprise you and give you guys a chance to see if you can identify the trade setup. But as I went over to my screen, I actually had my notes still up there from our Friday live room session, which essentially gave you the answer. So I had to delete it, and we'll see, hopefully this editing comes out good and doesn't seem too bad. But I'm looking at another potential advanced pattern formation, and I want to give you guys a chance to identify it on your own before I give you the answer. So take a few seconds to look at it, load up a chart on your own if you want. And feel free to pause the tape if you don't want the answer to be spoiled for you. All right, hopefully you're able to identify it, but we have another advanced Gartley formation here on the pound dollar. I'm going to start by drawing this. That way I know where my exit or my decompletion is at. But we're looking at an initial move again, swing high to swing low. This is going to be our X to A leg. We then have a retracement, giving us our B leg. So an X to A to B. You can see our B to C comes right down here, and we're looking for a D completion right up at our 127 extension. For you guys that have been following me in the live room or the syndicate, this was actually the kiss of death trade that we took, 2 weeks ago. We were looking for targets around the same area, right at previous structure highs. Unfortunately, the market didn't get there. I did get stopped out on trail stops, so I, still made some money off it. Made about, I think, 10 or 13 pips. But a little frustrated that we had to sit in this thing for over a week and just didn't get the follow through we wanted. But you know what, Akil, you can't complain. Any trade where you don't lose money and any trade where the market doesn't prove your idea to be right and you can still make money is always a positive. But just frustrating to be in that position for so long and have it come close to getting there, but not quite. But anyway, we have a potential bearish Gartley formation here once again. Here's what's cool about this one. If I just draw out a line around our D completion and then zoom out my charts, you'll see that we're actually at a pretty decent structural level as well. Meaning if I look left, you'll see that at the same level as my 127, that red line, we also have previous structure consolidation right here. And you can see previous structure consolidation all in here as well as the market kept spiking down and finding support. Now, none of this is needed if you're trading advanced pattern formations. They should be a strategy on their own, but it's always cool to have some extra support there just to give you some confidence. No pun intended with support on support. So 2 advanced pattern formations for you guys. One on the dollar Canada 4-hour, the other one here on the pound dollar 4-hour. And these are certainly 2 opportunities that are on my radar as I look to start our first trading week of October. Now, if there's one thing you notice with the 2 charts I just showed you is that, and really if you've been in the market over the past month or so, is that there's been a lot of consolidation. And consolidation, for you guys that are unfamiliar, is when the market is not trending. When the market is trending, it's either going up, it's either going down. Consolidation is really when it's going sideways and like a choppy like movement. And that was kind of weird for September. Traditionally, September is a very directional month. Again, traders come back off of their summer hiatus and they start putting positions in the market and we start seeing directional movement. This September has been very different. There hasn't been a lot of good movement at all on these charts. And one would think that it would be a very slow month. There wouldn't be a lot of trading opportunities. But surprisingly enough, we've been pretty consistent in the syndicate. And it's been a great month for advanced pattern formations and 2618 opportunities. And those are typically opportunities that you're going to see when the market is either coiling or in consolidation. So we actually had a very good month of September in the syndicate. I don't know why I say actually, like it's surprising. We've been pretty consistent, but I think we brought in about 500 pips. We've been hitting at about a 60+% win rate, which is pretty high. Usually, well, I guess it's right around. I'm usually between 55. I'm not sure what Charles is at, but we've been hitting at a pretty high win rate, which is good. And we've been able to boost our equity curve by 10%. So although it seems like the month hasn't given us a lot, we've been very efficient with our trading, and that's just following the process. Just like we talked about earlier, guys, we don't have a set pip amount goal when we come into the markets each and every day. Our job is to identify good trading opportunities, take those good trading opportunities and not make any mistakes as those good opportunities are playing out. And it's funny, when you do that consistently, the outcome will speak for itself, meaning you will get the results that you expect in the long, especially in the long run. And it makes your life a lot easier mentally not to think about the money, but just concentrate on the process and knowing that the money will be there if you're handling the process the right way. So pretty cool, good month, really good trading month. But now it's time to wipe that slate clean. October has started, so we've got to come in each and every day and grind out, or see if we can grind out another winning day, another winning week, another winning month as we look forward to completing another good trading year. So what happened in the past is the past. We're only as good as our next trade. So appreciate you guys joining me. As always, I'll throw a little rant in at the end of this video. If you are new and you like this, like it every week, right? Subscribe. That way you know when we put out videos, not just myself, but Charles Miles, Jason Greystone, anybody here at the Trade Empowered team. You'll be the first to know if you're subscribed to this YouTube channel. Also, if you're interested in being on our email list, so receiving updates when we release new items, whether it be products. I know a lot of you guys are waiting for the little pattern assistant deal I have here. Where's it at on my charts here? A lot of you guys are waiting to hear about this, or you may be waiting for the next live training event or live webinar we do. Just make sure you're on our email list. Head over to tradeempowered.com, click the Learn to Trade tab, and at some point there should be a little pop-up that says join our email list. So again, we don't spam you. We don't release, we're not giving you junk mail every day or anything like that. We will only update you when something quality is needs to be, when something new needs to be said, I guess. That didn't sound right, but you guys get what I'm saying. So until next time, guys, plan your trade your plan. Good luck in the markets during the month of October, and I'll see you guys during the week. That's the number one thing that gets traders into trouble. They just don't commit. They don't commit. You got to commit to something, whether it's, again, it could be with us. It could be with another educational place out there. It could be a random internet person that teaches. But you got to make the commitment to learn. And so many traders just don't do that. And what happens is they spend so much time and money. They spend so much time and money trying to do it by themselves that by the time they succeed, they're like, man, I wasted 10 years of my life. We had a trader shoot us an email about that the other day. He shot an email. He's like, Akil, first and foremost, I want to say I love what you guys do. You do a lot of great free content. I've never signed up for a course. I've never been in the syndicate, never been in a live room. And I'm a very successful trader. I'm like, okay, here it comes. Here comes the bashing. He's going to start saying, oh, you guys are scammers and you're sucking people dry for something that they can do on their own. But he said later in the email, he's like, although I found success, my biggest regret is not taking a course with you guys. He said, why do you ask? Well, because it took me like 5 years to find success. And now that I found it, I think back at all the money I wasted and really the time that I wasted trying to do it on my own. I would have made so much more of that initial investment back. And I'm dead serious. If you think about it, it's like this. When I did my course, right, I paid the Pro Trader course. It was about $3,000, I think it was. And, part of me, I didn't want to give up $3,000. I just got out of college. I don't have any jobs. And I'm like, $3,000, ugh. But then I thought about it. I said, Akil, you're going to be good at this. You're going to be good at this. Now, my expectations were a little bit inflated. I was on my 20, I can make 25 pips a day, 5,000 pips a year type thing. But I did the math and I'm like, okay, well, if I just trade well for a few months or a year, I would already make back the money that I spent on getting educated. And I come from the stock market, so I'm looking at investments. I'm like, okay, so you're telling me I can make all of my return in 1 year, and then basically you're playing with house money for all the years forward? It'd be stupid not to make that investment. Again, that was my mindset from my stock investment days, where I was more long-term focused than trading. And it's the same thing. It's like time. I think about how much I took my training in 2009, 2010, 2009, one of those years. So I've been trading for about 7 years now. I've been trading successfully for about 5 years now. And I think about, it's funny, I'm like, well, okay, well, how much did I pay for my course? $3,000. How much did I make over the last 5 years of trading successfully? More than $3,000. And it made perfect sense. And again, I'm not saying, look, I don't care if it's with us or if there are other people out there. right? It doesn't matter who it's with, but you got to do something. You got to take some type of action, whether it's trading with us, trading with someone else, or even just like buckling down and doing everything you possibly can to try and do it on your own. You can be very successful teaching yourself to trade. It's just going to take longer. Fabulous experience here in the week. Love the transparency in your trading style. Thank you. I want to show you the good, the bad, and the ugly. And then every once in a while, the super spectacular. Every once in a while. But that's good. It gives you a full experience of what trading actually it is. It isn't always making as many pips as possible. It's dealing with slow markets. It's dealing with fighting emotions. It's dealing with tough times. But it's also making positive returns. There is that part. And, you know, it is... You can be very, very successful with trading. It's just, it's not easy. It really is a grind each and every day. And if you ask any of the successful traders here in the live room, they'll tell you that. I don't think you'll find a single successful trader here in the live room that says, oh yeah, man, had a 10% month and it was easy. No, it's hard. But that's what makes it worth it, because that, you know, when stuff gets hard, that's when everyone else quits. And the market rewards those who are disciplined.